All right, guys, I will have a much more conclusive update on Friday. As of today, I'm short on time, so it's only uranium, gold, and silver. We'll hit the broad markets in the bond market on Friday. Right now, let's get started in uranium. As you guys know, I issued a yellow flag warning in the uranium sector about a week and a half ago, and I told you guys, look, this is putting in some very weak signals on the short-term time frames, right? Well, now that we've had another week and a half of trading, this weakness has spread into the weekly time frame. And so we are even weaker now than we were then. This is what I was waiting to see, and I will show you that as we go on. Again, veterans to this channel might see some of these patterns like this already and know what that means. It's something to keep in mind because there's a lot of confluence in what we're seeing right now. So first of all, I showed you the divergence on the RSI. Anytime you have divergence on the top, that is bearish. Anytime you have divergence on the bottom, that is bullish, at least potentially. Most of the time, it tends to work out. So when we zoom out on the weekly, remember in my last update, I had told you guys, look, in the big picture, nothing's changed because there hasn't been enough data yet to really have an impact on the weekly time frame, right? Or let alone the monthly. Well, since then, since I put out that update here, the weekly RSI has managed to roll over quite a bit. And you see how this is rolling over and down as it's rolling over and up in the same time frame. Well, that again, that's confluence that this is getting really weak. And look at this weak candle that we're putting in here on a Wednesday. This is not a good look. So what do you need to know? Hey, how are you going to play this? Well, here's the deal, guys. Now that you're getting the same signals in the weekly time frame as we had in that yellow flag update, it means we're going to come down and test some key support. All right, and so at a bare minimum, you're coming to test this wedge. You're more likely to come test this 50. And if you know anything about what I've talked about in the past and things like Wyckoff, well, then we very well might be coming down to test this trend line once again. And I think that, you just need to ask yourself if that's something you want to do or not. But the chart's telling us that we're heading in that direction. Now, usually we don't cover URA and URNM too much because they're kind of a waste of time. They're not very good signals. However, they are providing very good confluence for the sector right now, which is to say, look, we're closing on critical support here at the end of the day, all right? And that's meaningful. You're doing the exact same thing on URNM. Keep this in mind because companies like UEC are doing the same thing. So it's important to look at URA and URNM to find this kind of confluence because it's very telling. It has a lot of information on how we can anticipate the next move. So with that being said, what is the next move? Well, again, this same weakness in the daily time frame is now translating also into the weekly time frame. So look, if you were to break this support right here at $20 or so, $20.38, $20.25, you're coming down. And the first place to stop is right here. Not only do you have confluence of the support of this wedge, of this breakout, which is a retest, but you also have the confluence of the 200. That's a really strong level to support. So what you're doing is waiting to see what this support looks like. If this doesn't hold, it could be bad news bears, okay? It very well could be. But again, you have a very strong channel right here that you could also bounce off, but really you would really want to bounce here. This is something to keep in mind. It's got the same look in URNM, so there's no point in talking about it because it's all essentially the same. Moving on here, we will look at NXC. Now I hadn't even looked at this yet. Well, let's go into the daily. Okay, yeah. See, we have already lost this support. That's a bad sign. That's a red flag right there. And we're heading down rather sharply on pretty decent volume. The RSI does not look good. The next stop is 350. Let's go back to the weekly. See, yeah, it stands to reason you're going to come back down here and at least test this level once again. And you don't want to keep testing this level. We've tested it quite a bit. And, it's like the more you test it, the weaker it's going to become over time, okay? You're eventually going to run out of buyers here. It's going to get boring, all right? And it's going to get broken and it's going to sell. The saving grace might be is if it can avoid going straight down too quickly, maybe it can kind of cascade down over time. That'll give this 200 to catch up. You might get a double confluence of support there. That'd be nice to see. Otherwise, if you do break, okay, but try not to lose that 200. Although it would be very nice to see it touch that 200 with a very strong bounce on volume. That would be honestly quite nice to see. But again, look, I want to remind you guys of something, okay? When I put out that yellow flag update, I told you, I said, look, I found a new trend in uranium because we figured out a long time ago to use the big names to track the bottoms, okay? When to buy. We knew to follow Cameco, UEC, and NXE. That's it. The hell with the ETFs. None of that stuff matters. They're not good signals. They're not. They're not worth following, especially when you're trying to buy a bottom. But when I put out that last update, I told you guys, look, I think I found a new trend because I saw this in gold and silver too. And the trend is that even though we use the big names to find the bottoms, to find support, it was the smaller names telling us when to sell. Because what did we say about the W pattern? Well, we said once we get to our target, let's look at the response. And if we fail at that target, we what? We bail, all right? That was always the plan. And there was also the option, well, what if we break through? Well, sometimes you break through and you get what I call a peekaboo, which was when it looks like you're breaking through, but you don't really have any volume, and then it crashes right back through. And when you do that, that's extraordinarily negative because that's a failed breakout. And failed breakouts on double bottom patterns are very powerful. They tend to go all the way back down to the bottom. You can tend to triple bottom, all right? So keep that in mind as we look at something like energy fuels. What did energy fuels do? Well, it came up and it touched its target, didn't it? And what did it do when it touched its target? It failed. So what do you do when you fail? You bail. And this is exactly the kind of stuff I was talking about, but it goes further than that. What about global atomics? Same thing. Came up, touched it, failed. And what did it do when it failed? It rolled over. So this is the kind of stuff that I talk about and tried to point out that's super duper predictable. All right. And you guys could have been watching this on your own, on an equity by equity basis to, evaluate this stuff for yourself and think for yourself. Because once you know how the pattern works, all you have to do is play it, right? But it didn't stop there. It was also in companies like Encore, right? I was already showing this earlier. Look, you come down, you made the W pattern, right? And then when you got to the top, what'd you do? You failed. And what do you do when you fail? You bail. Why? Because it's going to crash. So this was the basis for the yellow flag. This is why I specifically pointed out these companies that were still up here at the time. I sold Encore at $1.08, and now it's down to 95 cents, and it looks like it's going lower, right? And, this is the kind of stuff that we do here. This is the kind of stuff I point out to you guys. The trend is your friend, and this is why you always look for confluence in the sector, because it's stuff exactly like this, So what do I think is going to happen? Well, I think we're likely going to come back down and touch major support on weekly timeframes again. It doesn't look good. Now, tomorrow, could some headline come out that changes the world and changes the fundamentals of uranium? Sure. But all things being equal, I think that the yellow flag is quickly turning orange. Now, in the case of something like SMR, it can tend to behave a little independently of the uranium sector broadly, as does Silex. But I will tell you that it's, kind of painting the same picture. I think, we're going to come back and touch this breakout at a bare minimum, call it $12. If we lose that, we're easily coming down to, 11.17 or whatever kind of confluence we end up with this 50 on the weekly for sure. Now, gold's surprising me a little bit. It's honestly gold and silver. It's looking a bit like uranium. So this is a weekly time frame for AG. We broke back inside this major support line, and we are closing on it to end the day. Hopefully it holds because breaking, I'm not sure, would probably at least come down to the same level we had fallen to before. It's not the best look. For when I posted that yellow flag in uranium, gold and silver actually looked quite strong still. But since that time, it is managing to weaken quite a bit as well. And so it's starting to look like at a bare minimum, we're going to come back and retest these levels. Could it be another double bottom? Very potentially it could be. That's something I'd be looking forward to, but on pretty much every time frame, you're seeing the same thing with all indications that we're going to the same place. In the case of something like Hecla, I will tell you this. You do have the potential, and there is confluence, to put in a bit of a inverse head and shoulders, okay? So you get this one, and maybe it does something like this, and you'll get this one, right? You can see this pattern developing in several of these equities. It's possible. We'll have to watch over the course of the next week or two and see what kind of develops. But let's say it does kind of start putting in a pricing pattern like this. This will be probably a pretty strong buy. Otherwise, I think if we come back and retest this level again, that's your next opportunity to buy if you're looking ahead. And this you can extrapolate to pretty much everything in the sector broadly. Okay, so treat it like another potential double bottom. Once you get back to these same areas again, just go for the buy. You'll be just as oversold, if not more oversold, the second time as you were the first. I will not be trading any of the stuff I bought down here. I like it too much, and I don't see it really going any lower, and so I'll be treating it that way. Again, things like Agnico Eagle, if it comes back down to this level, then I'm, hopefully if I have the opportunity, I will buy more, but I'm not going to sell what I have. I'm not going to do it. Not in this market condition, not in this market environment, not in this macro environment. I don't want to wake up one day to whatever news is coming inevitably. I am happy to continue accumulating down here. I think you should be too. I do not think that you should look at this fearfully. I think you should be opportunistic if you didn't listen last time to listen this time. Let's see what happens. We'll evaluate with a better update on the next go-around come Friday or so. But for right now, guys, hang tight. I don't think anything is necessarily surprising right now. Just understand that the potential downside in these things could be, another 20% or so. So this is why we encouraged profit taking with the yellow flag. And again, look at the case of UEC here, right? This double bottom, it practically hit its target. It was just a few dollars short, and it rolled over the way it did. So I'm going to go ahead and call this a failed breakout of the W pattern, the double bottom, which means we are probably honestly going back down there unless something big changes. This is what you're looking at all over again. And by the way, just to make sure that I'm understood crystal clear, if you get a strong bounce here where we rested today, that's equally good, all right? And especially if it comes with volume, right? So if you're looking for a rebound in the immediate future, if you want to know what to do tomorrow, then see the response here, okay? Because breaking this support, which we've talked about, which we're sitting on everywhere, okay? You lose this, you're in trouble, all right? But if you hold it, then potentially you could turn around and make another leg up. It really depends on the reaction. But you are at a reaction moment here. So you're looking to see what happens. All right. So take this into consideration with everything else that I've said to this point. Again, I'll give you guys a solid, thorough update on Friday.